Georgina, Emma, Brian, many thanks for giving us the opportunity to open today's event here. And just talking to Brian, we have a fantastic audience today. More than 250 registered participants here. So I think really a great success story underlining the role of ICMA in this area, and especially looking at DLT blockchain. Brian, you mentioned some of the topics we were working on. So standardization is a key theme. Over the last 5 months, we were working on defining a so-called compendium, a kind of guideline when investing and when issuing tokenized bonds. So we've had more than 150 stakeholders working under the lead of ICMA's Gabriel Carlson to get this document set up. As ICMA, we are participating in Project Guardian, led by Singapore MAS. So compared to the last couple of years, interest is significantly picking up in this area. And today I have the honor to present you not only here a fantastic audience, but also a fantastic panel with literally the entire chain of a life cycle of a bond represented. So starting at the issuance process, then going to secondary market trading activity. Legal topics are extremely important. Regulation is playing a key role. And then also when it comes to judging DLT-specific risks, we have representatives here. But first, to start with, I will give the panelists here the opportunity to present their company and to say a few words about their role they have in this ecosystem. Very happy to start with you, Stephanie.
With pleasure. I'm Stéphanie Cabossioras. I'm the Secretary General of Générale-FORGE. And I'm in charge of all legal, compliance, finance affairs. And before that, I had worked at the French Markets Authority, where I contributed to draft the French regulatory framework for crypto assets, where we proposed what became the EU pilot regime. And in between Générale-FORGE and the AMF, I was working as the French General Manager of Binance France.
Stephanie, thank you. Bryony.
Thanks, Christoph. So I'm Bryony Widdup. I'm a partner at Hogan Lovells in the capital markets team in London. I'm also a member of the digital assets and blockchain core team. I've been working in digital assets space for a number of years and currently focused on tokenization topics, including digital bonds.
Thank you, Marat.
Hi everyone, I'm Marat Faritov, part of Moody's Ratings, actually part of digital finance and digital economy team in Moody's Ratings. So what we do, we support our credit rating analysts when they have to work with digital ratings and tokenized funds. And I guess August has been a very busy month for us because almost every week we had a committee talking about digital bonds, tokenized funds, digital covered bonds. So we definitely see it's picking up, and we're also curious to see how it goes.
Good morning, everyone. My name is Patrick Cheng. I represent the World Bank. I lead the financial technology team at the World Bank Treasury, so it's great to see a lot of familiar faces today. We are actually one of the biggest issuers in the super space, and we're very glad to kind of participate in a lot of the journeys in digitization. A little bit about my background. I was part of the middle and back office and leading that for the last 15 years. I recently joined this role about 2 years ago, but already seeing a lot of different examples being kind of materialized in different markets. So it's great to be here. Thank you.
Good morning, everybody. Stefan, Bosshard. I'm responsible for building and running the fixed income product at SIX Digital Exchange, or in short, SDX. SDX is a fully regulated stock exchange and central securities depository running on distributed ledger technology in Switzerland. We're a 100% daughter of SIX Group, so the Swiss infrastructure provider. We currently have over 1 billion in assets, or over 1 billion issued in Swiss francs in digital bonds, including Patrick's bond or the World Bank bond a couple of months ago, and we are the infrastructure chosen by the Swiss National Bank for providing wholesale CBDC in Switzerland.
So many thanks for your brief introduction. I guess looking at evolution of tokenized assets, evolution of tokenized bonds, really the good thing is we don't have to start today with a disclaimer. We are not talking about cryptocurrencies. We are not talking about Bitcoin, because I guess everyone is advanced in this area right now. So we can really jump on our topic of digital bonds. I guess what all of us what we agree is that blockchain technology has in the future the potential to transform and to reshape parts of the landscape of our financial industry we are working on. On the one hand, it's important to talk about tokenized assets like tokenized bonds. On the other hand, and that's what we've seen in collaboration with a number of central banks nowadays, as important as asset on chain is also the cash leg, so cash on chain, and actually to raise all the benefits we expect from the new ecosystem. It will be quicker, it will come at lower cost, it will come at less risk. It's really important that we have both parts in production, so the asset part and on the other hand also the cash part. And in today's discussion round, we want to focus on where do we stand right now, looking at tokenized bonds, and also sharing some visionary thoughts, what's next. And in this context, I mentioned it before, ICMA has done a fantastic job. We will also briefly address the compendium when looking at DLT-based bonds, and also looking at the risk considerations. But now the stage is yours, coming into the details. And I would like Patrick to start with you. So when looking at the new ecosystem of token economy, it's something where we want to create benefits for the entire ecosystem. So we don't do it technology for the sake of technology, but the goal is really to sort out pain points we have in today's industry. And as one of the most innovative global issuers, as World Bank, you've had already a number of issuances. Maybe you can share some thoughts, some experiences, and also answer the question, what's really in it for the client? What are the benefits you would expect from tokenized bonds?
Oh, certainly. Well, thank you for the praise. Actually, World Bank has been kind of doing quite a bit of the first in different markets, and obviously digitization is no part very important for us. I think one of the biggest piece that I wanted to mention first is the World Bank. We're almost like a cooperative. We're owned by 189 countries, and basically we have two entities, IBRD, the main arm, and IDA, our development arm. Both equally added up to almost 70 billion in annual size and issuance. What's important for us is how does these capital market works more efficiently, so that in a way our mandate is to bring these technology developments and market infrastructure efficiencies, pass it on to our emerging economies and development entities, which is almost 80 or 70% of the countries that we work with. A little bit of a background, we have been looking at tokenization for a number of years. We started in 2016, where we first worked with, in Australia, when we first issued the blockchain-operated new bond instruments. We call it Bondi. If you take all the letters, it's the Bondi, and it's a nod to the Bondi Beach at the time. That experiment and a pilot transaction was smaller, very close loop, But I think at the time we really wanted to learn about what is this technology can really bring to us. And one of the key learnings that we have was really knowledge that we have gained through that. We didn't get the chance to work on the digital money yet, but we were able to use technology to look at how asset can be transparent for us as an issuer. Fast forward then in 2023 and 24, back to back, we realized after that transaction, we would like to see how this technology can scale. And it's all represented in this room today that we couldn't be able to scale without all of you. So we work with two market infrastructure, financial market infrastructure. One is Euroclear in October 2023, and then again in, I would say in May, that we announced it with SDX. So both of these transactions, we wanted to see the scalability. We like to see how digital assets and perhaps tokenized money, and even further in the recent transaction, we were able to see how wholesale CBDC can kind of help affect the change, which is something that we haven't learned from our past experience. And I think, Chris, you mentioned about what we have learned. I think there are definitely a lot of benefits that I don't need to spend too much time because it's been talked quite a bit. But I would say, transparency is key. But I think I would like to focus a little bit about the challenges and the experience that we have learned. Is especially, it does create a great promise for us, this technology, because in a lot of the cases when we are operating in the middle and back office, and also in our front office on the trading side, we do see a lot of data being replicated multiple times. So this, single source of truth is kind of important. But also, asset servicing. I think the automation aspect is what we aim to see if there is going to be benefits from that. But also, importantly, the transparency to the issuer. It is a very efficient market right now, but it's efficient enough that so many players are touching the same data. Once we throw a question down the chain, it's very hard to get the answer. It would just take time. Can this technology bring a more real-time, dissemination of those information is going to be very important. But what we have seen so far is through these transactions, there has been quite a bit of legal and risk consideration, which I think some of our panelists can speak more about. I think technology is not the biggest problem. It can solve everything. I think it's the workflow. And actually, in a project that we have done, usually it's 1 to 2 years that we go through it. We spent probably a majority of the time talking about the legal aspect of it. What are the risks that brings to our investor? What are the things, the liability that might bring to us as an issuer? And just being a biggest issuer in the market, I think we wanted to bring those technology and learnings and pass it down to our development partners. And hopefully, they don't have to go through the same thing that we have to go through and really fulfilling the mandate of what World Bank is here for. Thank you.
Cool. Patrick, many thanks for sharing your thoughts from the starting point of the entire value chain of a bond from an issuer's perspective. So given the fact that we also have a number of investors here in the audience, and our experience as Union Investment is that there is appetite from the investor's perspective, but is there full readiness with every firm? Do we see as much investors in tokenized bonds as we have it on the traditional side? I guess that's not the case. Do you have a message here for the investors among us in the audience, what you would like to see going forward?
Well, obviously, the World Bank, also Treasury represent both the funding and investment side. And maybe I could bring my investment hat on, where we work with our investment arm. They're asking the same question as the issuers. They look at us as an issuing side of the primary products that we issue, what the value it brings. But on the flip side, I think this question of network effect is going to be very important. We love the idea on the private market. Everybody's doing their individual platforms, and actually brings in a lot of new ideas in how this new ecosystem could look like. But I think from our investment side, it is also challenging, because where do I find that one entry point? So our thinking have changed since 2016, whether this technology can actually disrupt the market, but I think it shouldn't be. it should be enhancing and enriching the whole ecosystem, where I think these intermediaries will probably take on a new role of how to collect and, be able to that one point to different ecosystems. And as part of our work is also looking with the like of IMF and other IFI on the evolution of money. Is it commercial money? Is central bank digital currency? On our side, when we do a lot of cross borders, we also are thinking if there is this one-stop shop that can kind of move things a little bit faster. So I think definitely the network effect is there. And really the readiness of all of us. I think process flow is what driving a lot of the thinking. We challenge ourselves within to see if there's any changes in the process with the new ecosystem. So that's another important piece. And of course, the integration technically. I think technology itself would need to find a better way to kind of consolidate or make it more connecting and plug and play from our point of view. Thank you.
Cool, thank you. I guess what all of us, what we've also learned, that regulation plays a major role when looking at tokenized bonds. So nowadays, looking at the traditional side, what we've all as an industry have achieved over the last 10, 15 years, starting point was after the financial crisis, the G20 summit in Pittsburgh back in 2009, that we have a fantastic set of regulation which guarantees us financial stability. As important as financial stability is nowadays, also when going into the tokenized world, we need a clear governance, we need regulatory guidance, we need a framework. And looking here at Europe, what are the applicable laws for tokenized assets? Is on the one hand, MiFID II in Germany, we have the Electronic Securities Act on top of that. Looking at trading places, trading venues coming, Stephanie and Bryony, to you, we need dedicated regulations for DLT MTFs. And in continental Europe, we have the DLT pilot regime, which went live back in March 23. In the UK, we have the equivalent with a digital securities sandbox. What are your thoughts, Stephanie? Will it be a success story now after the law went live? About 1.5 years ago, we've seen no licenses as of yet. But as we know from the traditional world, secondary market trading, also a functioning repo market, is really key to make tokenized assets a success story. Where do we stand? What are your thoughts?
It will be a success eventually. But so in Europe, of course, the main blocker is the regulation so far, because the traditional financial regulation has not been thought for DLTs. So there have been several experiments, and Société Générale-FORGE was at the edge of tokenization. On the primary market on issuance, Générale-FORGE was the first to issue a digital bond on a public blockchain, on Ethereum, in 2021. Then we participated to the first emission of the European Investment Bank of digital bonds. And most recently, last year, we issued a green bond, which was settled in a stablecoin, a euro stablecoin, the euro convertible, which is issued by Société Générale-FORGE and backed by Société Générale. So it's another step towards the tokenization of the whole process, bond issuance and settlement in tokenized cash. So for primary markets, there is no real legal blocker. The real blocker was on secondary markets, and actually all this reflection started in 2019. It was first a paper published by the IMF when I was there, which was a paper on legal analysis on security tokens, which is still in the website of the IMF, which analyzed regarding a European law all the life cycle of a security token, from issuance and prospectus regulation to negotiation, MiFID regulation, settlement, CSDR, and then adding in an investment fund with UCITS, etc. And all this analysis concluded that it was possible to do it on blockchain. There was one blocker, one in the whole legal framework. It was the obligation to have a settlement of securities in central bank money. And it's in CSDR, Article 40. And so we were blocked there because it was European regulation. And that's where the idea of the pilot regime emerged. So we said, if we are obliged to apply European law, let's propose not to apply it for tokenized activities. And that's why the pilot regime emerged, and it's like a sandbox, like a derogation to traditional financial law. Alors, so why is the pilot regime really a disruptive regulation? For two things. First, it allows, and it's written, to settle securities, tokenized securities, in either central bank money, or stablecoin, or tokenized cash, or even cryptocurrencies. I don't know any other law in the world saying that on the paper. And the second disruption is that it institutionalizes the fact that there can be no more intermediaries to participate to the market. So if you create a secondary market on DLT, there is no need for intermediaries. A final investor, even retail investor, can participate directly to the market, which is the direction that take, exchanges in the crypto world. So this is really a big step for me towards the tokenization of the financial system. So far, there are two problems with this regime, which was experimental as well. First, the thresholds. The thresholds, so there are issuance thresholds and negotiation thresholds daily, and they are too low. Voilà. It was a first text, and the thresholds were not well calibrated. So now the business case to get a pilot regime license the balance is not interesting. And there is a second problem, is that the pilot regime is limited to few assets, bonds and shares, and we need to open it to all financial instruments, derivatives, complex bonds, etc. So these two things need to be fixed at the European level. So we are now advocating to enable businesses to be created in this sense. We are advocating to review this pilot regime and to lift these two blockers. So nevertheless, for me, the direction is there. The European institutions understand the need, and there is a demand in the market to have these secondary markets, like in other jurisdictions, because it's the way forward to tokenize the whole life cycle of financial instruments.
What do you think? Many thanks for your thoughts, Stéphanie. What do you think? When will we get the first licenses to go live in the EU? Should be pretty soon, shouldn't it?
Yes, I think there are like 4 projects so far in member states. Voilà, mainly from newcomers and from traditional players, but they will necessarily be limited to certain assets and maybe to less liquid assets because of this threshold.
So hopefully getting this box secondary market trading activity ticked soon. At the moment, I think we have a well-working workaround. Most recently in Germany, we've had the issuance of 2 bonds of KfW, and typically there's the kind of myth, it's a buy and hold strategy when as an asset manager you invest in these type of products. So therefore we've set up in the OTC world a regime where we have market makers also on electronic systems, show us markets, click and trade doesn't work, given the fact that it's not an MTF. But what's important for us as an asset manager, that we have the chance to increase positions and also to decrease positions, that we have order book depth and that we have tight spreads. And that's, as a workaround, only waiting desperately for the first licenses under the DLT pilot regime to go live, but that's what we have in place right now. Bryony, looking at regulation from a UK perspective, I guess really the benefit here in the UK was in the UK you took took some learning lessons from what potential hurdles with the DLT pilot regime on the continent were. Stéphanie mentioned the very tight thresholds, so the limitations on a certain bond, limitations on overall trading activity on a DLT MTF. And I remember at ICMA, we've had a number of consultations where we gave some thoughts here in the UK what should be improved when it comes to the digital security sandbox. Maybe you can share some thoughts, also where the UK stands. When can we expect the first licenses here? And looking at the government, looking at the Treasury, I think there's also a big project potentially underway with a digital guild. Maybe you can share some thoughts about a UK perspective.
Sure, thanks, Christoph. Yeah, I mean, the background to the digital securities sandbox is similar. Obviously, sometimes it's better to come second. Indeed, you can look at some of the challenges of the first evolution of the EU pilot regime and try to create something that is less has less limitations. I suppose just the key challenge, as well as that sort of tokenization of the whole ecosystem. The law in the UK provides that if you have the trading venue for transferable securities, you need that CSD settlement. And so if you're trying to do that using distributed ledger technology and you don't have CSD facilitation or support plugged in, then clearly that creates a challenge for a UK-based end-to-end process. And really the digital security sandbox is set up to target tackling that barrier. You mentioned workarounds, Christoph. There are also existing workarounds, right? So, I mean, we have crypto MTFs. And Archax, for example, it's one of our clients, does offer, for example, money market fund shares as well as crypto on that MTF using workarounds. And there are interoperability solutions between that traditional financial security space and the DLT world. And I've seen Onera somewhere here in the room. And they, work with Archax in providing some of that functionality. But legally, those workarounds are structurally, replications of the economic outcomes, but legally, structurally, have to kind of include some additional complexities. And I think that goes against some of the ethos of the native digital bonds ecosystem, essentially. So what we want to try and achieve through the DSS is the ability to have that simplified offering. Now, one of the options in the DSS is potentially this hybrid service provision, where you can have the MTF functionality, that's FCA regulated, and the CSD, DSD, Digital Securities Settlement functionality, that is regulated by the Bank of England in a single offering. And that, we're not really kind of sure of how that would go forward. On the one hand, it sounds pretty attractive, well, the technology can solve for these functionalities, so just have it all in one. On the other hand, from a regulatory and legal perspective, that would be a very complex regulated entity. And so there's a little bit of still, uncertainty about how that might look. But certainly from that digital settlement entity perspective, there's a lot of opportunity with the Digital Securities Sandbox. You've already mentioned things like the limits being an issue in Europe. We have this scalable limits provision put into the sandbox in the UK, so that's really going to help with enabling scaled, meaningful, and kind of the ability to have these multiple issuances within projects so that, in the overall capacity limits have been increased. It is at the moment limited to UK entities, so that is something that's often brought up when we're discussing, the scope of the sandbox, whether that's the right decision from a scope perspective. So that could pose a challenge in the future. And also, there's always questions around exit, right? All sandboxes, no matter how you look at it, you've got to go into a sandbox. Now, the UK sandbox has got this ability to, it works by disapplying or modifying existing laws to enable these functions to be carried out, not being in breach. And so there's the ability to permanently disapply. But the decisions about that permanent disapplication won't be made until, further down the process. And so there is always inherent uncertainty in how you would exit that sandbox environment. And so that creates difficulty when you're making investment decisions up front, because obviously there's a lot of investment that needs to go into building a project to put in. So, those are still some of the challenges that we see. So maybe it's not perfect, but maybe being second is a good thing in some respects, and there's been some improvements.
Good starting point. Given the time, Bryony, I would like to hand over to Stefan, and many thanks for your thoughts on the DSS. In continental Europe, we are looking at the DLT pilot. In the UK, we are looking at the sandbox. That's something in Switzerland you have already live at Swiss Digital Exchange for a couple of years, and I guess for good reason. Looking at your webpage, it states one of the world's leading exchanges on digital assets, SDX. Most recently, I've had a meeting with you, and you were talking about equality, so creating a situation similar to the traditional world, but that's already past that stage, and you're not talking about equality anymore, but about supremacy. So what really is in the value add? And maybe you can give us some thoughts, what you've achieved so far and what's next for you in Switzerland.
Thank you very much, Christoph. And thanks for being here and being invited to that panel. I think, as my former panelists mentioned, the two biggest challenges we saw and still see are secondary market liquidity and the whole settlement angle, also in Switzerland. That's why before we started, we decided to have our digital offering, our distributed ledger-based offering, regulated as a proper CSD and as a proper stock exchange. As a proper CSD, we're part of the whole market. That means settlement works. That means that we can have links to other central securities depositories out there, to our mother house, SIS, to Euroclear, to Clearstream. And that means that we have a bridge. We have a bridge to the traditional world. Digital assets such as the World Bank bond, which has been issued in May, can be transferred to the traditional world, can be held there by investors via their traditional channels. And through that, we also solve the secondary market issue, because if it's available in all the CSDs, you can trade those digital assets everywhere in the world. So we're a proper stock exchange. They're listed with us. That means you can trade those bonds on other stock exchanges. You can trade those digital bonds also OTC via Bloomberg, market access, TradeWeb, wherever you want. So we don't provide the secondary market liquidity. Of course, we have our own stock exchange and we invite you all to trade there, but you don't have to. Those assets are available everywhere and you can trade them wherever you want, and that solves it. And that's one part, as you mentioned, that we see that, at least in Switzerland, we reach the equality. So in secondary market trading, in where you decide to hold your bonds, it doesn't matter if it's digitally native or if it's traditional. You can hold and trade them wherever you want. They also qualify for inclusion in the bond indices. They qualify for being part of the collateral basket of the national bank. So that's all there. Investors are happy with it. Investors, for example, are so comfortable with digital bonds in our market that sometimes they don't even notice they hold them. So when I hand out the ISIN codes of the digital native bonds, they discover, oh, I have them in my portfolio, didn't even know. And that's exactly what we wanted to achieve. Now, with being equal, and also from a cost perspective, we're not more expensive, and therefore, with being equal, that's good, but that doesn't yet give the market an argument to actually go digital. Well, you can do everything, it's not more expensive, okay. And that's why we're working currently on digital bond supremacy, because we have that fancy technology in the background, and we want to leverage it as good as possible. So we have projects. Most interesting one, I assume, is something we call smart variable cash flows. So it's really to get the smartness out of the technology, allow new structures of bonds, for example, green bonds, where you can have your interest rate coupled to, for example, the CO2 output of an issuer. So we can grab that information in a data token or in a database, include it, calculate the interest rate and pay it out automatically. Also, and I talked to Patrick about it, outcome bonds for the World Bank, for example, where you have the amount of rhinoceroses in a national park in South Africa. The more rhinoceroses you have, the higher the coupon. And that's all stuff we can actually do with our technology, and that's the next step. Now, you might ask yourself, well, it's nice that you do it in Switzerland. We're also working on making this available outside Switzerland. So we're currently working on allowing native digital bonds under English law to be included. And what we also do, and that's thanks to ICMA with the standard that you created on digital bonds. So what we want to allow is that you can use that standard, send a bond in the standard defined by ICMA to us, and we can include it, we can allow that bonds to be listed on our stock exchange, on our digital stock exchange. So that's the stuff we're working on, which I think will allow us to go one step further than actually equivalency towards the supremacy of digital bonds.
So Stefan, really cool to see what you've achieved over the last couple of years. So to summarize, as of now, we've seen issuance process, Patrick, box ticked, is properly working. Looking at secondary market trading activity on the continent, in the UK, we are on the way. Switzerland is already live. Custody, you were talking about, is also working properly, so the connectivity of the digital world with the CSDs, which is clearly required. And we talked a lot about the opportunities, but looking at financial stability, as important as looking at opportunities, we also should look at potential DLT technology risks. And Marat, that's why it's perfect to have you here also as a part of the panel. Looking at Moody's, one of the world's biggest rating agencies, you've done a tremendous work also in the tokenized space. Can you give us some thoughts? What is it in specific, focusing on DLT risks? What is it, what you're looking at? And can you imagine at one stage that a DLT-based bond will get a different rating compared to a traditional bond?
Thank you, Christoph. Great segue to my points. So at Moody's, we actually have already rated around 30 digital bonds and assessed 2 tokenized funds. So what I can tell you, believe it or not, but all were different. So all required case-by-case analysis. Even if we take the same issuer issuing the second bond or the third bond, they were choosing different setup. So it required work on our end to make sure that we are comfortable to rate these issues, right? And by saying comfortable, we had cases when we decided not to rate a digital bond because we were not sure if the setup that was chosen is okay given the additional risks that we would look into. So when we look into different digital bonds, the first thing we look at is the platform risk. So we want to make sure when the underlying blockchain platform used for the issuance is properly functioning. And Moody's is quite conservative, so we always look at the worst case scenario. So what happens if it's not working anymore and it's not even able to restore its operations, right? So in many terms and conditions that we've seen of the bond issuances, there are cases when they can actually substitute the tokenized bond or digital bond with a traditional bond. That gives us some comfort, right? Also, there are some cases when they say, well, if something happens to the blockchain, we'll just repay bond in full immediately, so we don't need to wait until the maturity of the bond. So by saying that, we always look into these business continuity options, right? Making sure that there is a backup solution if the main solution is not functioning. We also look into smart contract risk. So if, especially it's issued on the public blockchain, we want to make sure that smart contract has been properly audited by the third party. So there is another kind of pair of eyes with experience looking at this particular issuance. We also take a look into the asset representation risk. So we want to make sure that investors of digital bond, they have the same rights as if they were invested in traditional bonds. So there should be no difference at all. And we definitely look into kind of third-party risks, such regulatory risks, cyber risks. So, for example, in terms of cyber risk, if, let's say, you issue a token that represents a bond, right? And then the token is stolen, is there a way how you can freeze the token? Or is there like a secondary market where this token can be monetized so hackers can make use of it, right? Because otherwise, if they cannot make use of it, the incentive of stealing a token is relatively low. So, to summarize, when we look into digital bonds, we have to apply additional level of analysis, look into the technology risks, and put them in our reports, make sure that investors are aware of this risk and that they're aware that we are looking into these risks.
Thank you for also focusing on the risks we shouldn't ignore. Yeah, to conclude, I guess I hope what we made clear that tokenization, also tokenized bonds, they really can going forward reshape parts of the financial industry, can deliver significant benefits to the end investors, to all the participants in the ecosystem. We didn't really touch on the topic of instantaneous settlement, atomic settlement, potential 24/7 trading, what we might see going forward. Looking at cash on chain, we see right now the ECB in continental Europe with the exploration phase, where we have 75 participants working in combination with wholesale central bank money, which will be an integral part of the ecosystem. Also, the SMB is extremely advanced in this area. In Asia, we have lots of projects focusing on cash on chain. So from a visionary standpoint, and I would like to give each of you maybe 30 seconds for a very brief statement. When coming together here at ICMA, same around digital assets in 5 years' time. Token, will it be the new normal? What are your thoughts? Stephanie, where do you see the ecosystem evolving to?
Yeah, in 5 years. We don't know at which speed it will come, but in the end, and I hope it will be sooner, when we demonstrate that using DLT technologies make transactions faster and with a lower cost, voilà, it will fly.
It's a given. Bryony.
Similar response here, but you did ask me about digital gilt. So I think in 5 years' time, our expectation would be that we'll hopefully have that out there in the ecosystem, and as a common model actually for that sovereign issuance piece. It's been tested already. Some have been done, but I think we will definitely see an uptake from that perspective.
Marat, will you still work on traditional bonds or will everything be tokenized?
Well, great point. I guess our goal that in 5 years, our analysts are well equipped with the tools to analyze digital bonds, and we are slowly moving towards this target.
Patrick.
Yeah, no, I think in 5 years' time, I would say we wanted to bring this technology to the public side. We're actually working on two separate interesting ideas. One is tokenizing our loans for traceability purposes with us in the country. And more importantly, I think with the success we have done in the Swiss market and the supply of central bank digital currency, we're running a project, a consortium with the Swiss National Bank and the Bank for International Settlements on Project Permissa. It's basically tokenizing a very, very legacy promissory note portfolio that we have. As you know, we source our funding through bonds, but we also get capital contribution with the countries through cash and promissory notes. So hopefully in 5 years' time, we can affect the public market with that, with some cool money exchanges along the way.
Stefan already done a great job. What's next?
Well, it's a good question. I think in 5 years' time, I mean, when it comes to the issuance of bonds, I think bonds will be digital by nature in 5 years' time in most jurisdictions, just because the efficiency gains also in asset servicing, in corporate actions, so on and so forth, they're so tangible, it has to come that way. When it comes to trading, I'm a bit less positive. Probably we need another 5 years to have trading also on the digital side.
Many thanks for the fantastic panel, and I guess all of you have demonstrated being ahead of the curve. Like ICMA on the topic of digital assets is really key, and I hope we could convince you to join the journey on token economy and on digital bonds. Many thanks.